You ever look at a financial chart and it's just a mess of lines and colors, right? Well, what if I told you it's actually a story, written in a kind of secret language? Today, we're going to learn to read it. Welcome to our deep dive into the art of Japanese candlesticks.
So, this whole thing starts way back in the 1700s with a legendary Japanese rice trader, Munehisa Homa. He got something that was, totally profound. Markets are all about human emotion. He didn't want to just track the price. No, he wanted to track the psychology behind it, the fear, the greed, the hesitation. And so he came up with this brilliant visual system to capture all of that.
Okay, so before we can start reading these, epic market sagas, we've got to start with the basics. We have to learn the alphabet. And in this language, the letters are the individual candlesticks themselves.
So what is a candlestick, really? Think of it like a snapshot of a battle. For any given time period, a minute, an hour, a day, each candle is telling you a four-part story: the open, the high, the low, and the close. It's the whole drama of that trading period, all packed into one simple little shape.
All right, let's zoom in on the main part, the real body. That's the thick rectangular bit. This is where the real action is, showing you the distance between the open and the close. If you see a long body, that means one side won a decisive victory. But a short body, that's a sign of a much tighter, kind of indecisive fight.
And what about those thin lines sticking out from the top and bottom? Those are called wicks, or sometimes shadows. They show you the absolute highest and lowest prices that were reached, even if the price didn't stay there. I like to think of them as the little skirmishes happening at the very edges of the main battlefield.
So how do you know who won? Simple. It's the color. A green candle, that's a bullish one, means the price closed higher than where it started. The buyers, the bulls, they were in charge. And a red or bearish candle? Well, that means the price closed lower. A clear win for the sellers, the bears. It's really that simple. Green is up, red is down.
Okay, so now that we've got the letters down, we can start putting them together to read phrases. These are patterns made up of a few candles that can signal a big change, a plot twist in the market story. We're going to start with what we call reversal patterns.
All right, one of the most powerful and honestly most reliable phrases you can learn is the engulfing pattern. It's a two-candle story, and the second candle is so strong its body completely swallows, or engulfs, the body of the one right before it. This is a huge sign that momentum is shifting, and I mean dramatically.
So you've got two main flavors of this. First, the bullish engulfing. This happens after prices have been falling. You'll see a small red candle, and then bam, a huge green candle just completely swallows it. This is screaming that the buyers have suddenly just overwhelmed the sellers. And then you've got the exact opposite, the bearish engulfing. A big red candle swallows a little green one after an uptrend, telling you the sellers are now running the show.
But here's the thing, and this is super important. Context is everything. For an engulfing pattern to really mean something, it has to show up after a clear, established trend. You can't just find one in the middle of choppy, sideways action and expect it to work. Oh, and one more thing. The bigger that second candle is, the more powerful the signal.
Okay, next up is a really cool one. It's like a three-part story of hope, and it's called the Morning Star. It pops up at the bottom of a downtrend, and yeah, just like the name says, it's a signal that the darkness might be ending and a new day, a new uptrend, could be dawning.
So let's break down this little three-act play. Act 1, you get a long red candle. Sellers are totally in control. Act 2, the second candle's tiny, indecisive. It's got a short body, wicks on both sides. This is that moment of doubt where the fight is basically a stalemate. And then, Act 3, a strong, confident green candle shows up, confirming that the buyers have wrestled control away and are pushing that price right back up.
And every hero needs a villain, right? Well, meet the evening star. It's the bearish twin of the morning star. It shows up at the very peak of an uptrend, and it's basically a warning sign that, hey, the party might be over, and things could be headed down.
And the story? It's a perfect mirror image. Act 1, a strong green candle. Buyers are feeling great. Act 2, that small, indecisive candle pops up. Suddenly, that confidence is starting to waver. And then, Act 3, a powerful red candle confirms it. The sellers have taken over, and they're driving that price down.
But what happens when the story doesn't actually reverse? Well, sometimes the market just needs to take a little breather. We call these moments continuation patterns, and they're like plot twists that tell you the original story isn't over yet. It's about to keep going.
Now, these patterns are incredibly useful. Why? because they help you tell the difference between a major, trend-ending reversal and just a simple pause. They're a signal that the market is just kinda gathering its energy before making its next big push in the same direction.
A classic example of this is a pattern called the Rising 3 Methods. Now this is a 5-candle pattern, and at first glance it looks like a reversal might be starting, but it's actually a trap for the sellers. What it really shows is a strong trend taking a short, orderly break before it continues to climb.
So here's how this 5-part story unfolds. First, you get a big, long green candle in an uptrend. Then, that's followed by 3 small red candles. They drift down a bit, but, and this is the key part, they all stay inside the range of that first big green candle. And finally, the 5th candle is another powerful green one that closes at a new high. And that's your confirmation. The bulls are back in charge, and the trend is on.
Okay, we've learned the alphabet, we've learned a few key phrases. So now, let's put it all together and talk about how to actually read the market's story and what it's all trying to tell us.
Now this is maybe the most important thing to get. Candlestick patterns are not a magic crystal ball. They do not predict the future with 100% certainty. What they are is a tool for reading market psychology. They're a visual record of that constant push and pull between fear and greed. They give you probabilities, not prophecies. That's a huge difference.
So, what are the big takeaways here? First, always remember, candles show you the emotion behind the price. Second, patterns are all about probabilities, not certainties. And third, context is everything. A pattern means so much more if it shows up at a key price level, a place where the market has turned around before.
So, the next time you look at a financial chart, I want you to try something. Don't just see lines and colors, try to actually see the story. See that battle between the bulls and the bears, see those moments of hesitation, and see those sudden shifts in power. It's all being told in this really elegant secret language.
You know, once you start to learn this language, you'll find the market has some absolutely incredible stories to tell. The only question left is, now that you know what to look for, are you listening?